Hey, ladies and gentlemen, step right up as we analyze my six-figure dividend stock portfolio, currently dripping $5,553 annually, which is quite incredible. We're going to look at the biggest movers, losers, and then in light of 900 subscribers strong, passive income investors alike, we are going to read some of your comments today on what you guys think on some of my videos. And thanks so much. Let's just jump right into this. Welcome back, my passive income investors alike. We got 4 accounts we're going to be analyzing today on my six-figure dividend stock portfolio. But more importantly, at the end of this video, we're going to read your comments and questions on my videos in light of the 900 passive income investors strong that we have going right now. You guys have changed my life, so I'm glad that I can share my creativity, my content, and my investment philosophies with you. And if you don't agree, never hesitate to let me know, because I love learning from all of you. So in light of that, let's just get right into the accounts and get through this, starting with my tax-free savings account, my favorite account, because this is tax-free income that I've been getting paid some dividends this month. We're going to get about $800 in total at the end of the month, but we've had a few payments come in already. Now, before we actually look and talk about the individual positions in this account to start, I want to talk about where I see this portfolio being by the end of this year. In my last video, I talked about cost averaging these positions to be at scale around $10,000 per position. But after analyzing everything in the full extent of all the portfolios, I've come to the conclusion that I want $8,000, between $8,000 and $9,000 to be the cap finished out position in each stock. And as we can see in the Canadian positions, I'm really over leveraged in these, which I'll talk more about in a second. But remember, in the US positions, these are US dollars. So these are pretty much filled out. If you take $6,900, convert it to CAD, you're looking between $8,000 and $9,000. So the only positions that really need finishing out here are British American Tobacco, GEO Group, and Southern Company. So if I take my Canadian stocks and I start leveraging them down, what I would like to do is start buying qualified REITs. Now, Canadian qualified REITs, if you're a Canadian investor or US investor in these registered accounts, they tend to offer you tax-free advantages on real estate investment trusts. So I've been looking at ones that you've recommended, and I really like companies like H&R, RioCan, TNT. So what I'm going to start doing is taking a lot of this money and rediversifying it into monthly income REITs. So that way, instead of getting choppy payments, because as we can see, guys, in this portfolio, my dividend income is very uneven. There's just months where I'm making huge amounts of money, and there's other months where I'm bringing in a lot less, which you can see in this little charting up here showing month over month. So in light of that, I'm also going to take a little bit of that money and rediverse it into these companies like GEO, like British American Tobacco, like Southern Company. And then, like I said, once they're all at $8,000, I can look ahead and never look back. I want to start focusing on newer positions as much as humanly possible to keep my focus on what is going to come next. Now, looking at the positions individually, talking about the Canadian banks, Steve Eisman, the great movie of 2008, Shorting the Housing Market, has been shorting the Canadian banks, including Canadian Imperial Bank and Royal Bank. And it looks like we're seeing a little bit of a short squeeze. And this is one of the reasons that I want to start diversifying my Canadian stocks, because I don't trust the economy here as much, but I trust that these companies will be around forever. So it's not like I'm getting rid of all of them. And I've been taking a mild loss. If you're new to this channel, recently I sold some Canadian Imperial Bank, but only for like $120 loss or something. And I've collected dividends off these companies for so long. There's no way I'm down on these positions. They've been in here for quite some time. And yeah, it'll be nice to start leveraging them down once we see a little bit of green. I'll probably start pulling some out of Bank of Nova Scotia and Northland Power in the next month. And then moving into the US positions, the most controversial US positions. And I want to talk about fundamentals today, guys. Whether you love them, hate them, sin stocks have been a wonderful performer for a long time, up till recently, the last 2 years, where these companies have taken excessive dips and losses on their equity part of their stock. But the dividends have been really stable. And even if we go into the fundamentals, and I'm going to talk real deep about the fundamentals in a second, but the base fundamentals, where they're having earnings of $4.03 against a dividend of $3.36, which is a payout ratio of 0.79 times. They can afford this dividend with a little bit of leeway in between. And if you don't know what this company is, Altria Group, Juul Tobacco. And when I look at a company, guys, aside from the moral and political aspect of it, I look at what it does for society, what holes does it fill, and what is its core fundamental with nature. And drugs have been part of nature for just as long in our history books as gold and silver have. And on that basis alone, and the charting and just how much this company's increased its dividend over time, I really believe in it long term. And as a value investor, I can't find a position that offers as much value as MO, which we're going to see because I hold a lot of it in my managed account as well, along with British American Tobacco. Looking at Apple, though, the tech stocks, guys, have been on fire this year, and I use these companies to help mitigate some more growth in the portfolio because the dividend yield is not that great, but we do get an incredible growth rate. So I try and find a good average between growth stocks and basic good income stocks, dividend income stocks, and that way I get a good balance of growth and income, which I think is the healthiest way to do it. And at the end of this video, I will talk more about my goals and what I'm trying to achieve with this portfolio. Moving into the most controversial of all of them, we're talking GEO Group, guys. This one, every time I see a stock drop 30%, I'm sure you feel the same pain I do. I was buying this, I should have been buying this like a month or two later instead of when I was buying it. But this is something this company's been through before. It's a prison stock. If you don't know, they deal with mentally ill people, kids that have discrepancies that need help. They deal with long-time, lifetime prisoners, things, all kinds of prison-based things. They have prisons in Australia, all over the US, some in Canada. They're a very diversified company, and they've been under a lot of heat, a lot of fake headlines, and a lot of things trashing this company to the ground. But the fact of the matter is, when I get worried about a company, the first thing I do is go back into the balance sheet, and then I start listening to the conference calls, reading the transcript, listening to the questions people have. And the fact is that even though with this company losing a lot of respect from the banks so they can't get loans, though trust me, with their balance sheet, they're going to find someone that's going to be willing to loan them money. They've reopened new facilities in Alabama, even though California wants to cut them off. And they're even expanding in Australia. And look at their payout ratio here, guys. We're talking about $1.92 versus $2.67 on earnings per share, which is a 0.72 times payout. And they can afford this for the next 3 years. So if you've ever seen a 13% dividend yield, usually you're really paranoid. And because of the drama, which has nothing to do with the fundamentals of the company, by the way, I've been driving it into the ground. And like I said, after I look at it and coming back to the fundamentals of why I buy these companies, I just can't see this going anywhere in the long term, guys. So, I mean, let's just ride out the next political wave of insanity. And if you don't believe me, you can go into their own fundamentals and read through it. Just my personal opinion. You don't have to agree with me. And if you don't, you can always let me know in the comment section below. With Microsoft considering to be one of the other tech gods here that's just killing it, man. The temple of Apple and Microsoft, just killing it. Southern Company looks like it's starting to pull back. I keep saying that, but it never really happens, does it? Literally in the last month, we've seen a bit of a pullback just starting into this week. But other than that, guys, this company's been on a tear lately over the last year. I got a really good buy-in on this one, but I still have to add a little more because the contributed limit I want to be between 8,000 and 9,000. I don't care what it does after that, even if it's down or up. It doesn't really bother me at all. So let's move into the managed account. The managed account is the most confusing account because this one's going to give me a lot of headache. And this is we have more Altria, British American Tobacco, Johnson & Johnson, Starbucks, and the wonderful Tesla, which isn't much of a dividend stock, but it's a millennial stock. So let's be real. But I'm going to take these positions and start leveraging Johnson & Johnson and Starbucks very shortly in the next week into my registered retirement savings plan account so I don't have to pay taxes on that money. The problem with these registered accounts is if I want to pull that money out, you don't want to pull out more than 5,000 at a time because you pay a 10% withholding tax. On 5,000, I think you pay 15 on 20, and anything over like 25, 30 or something like that, it's like 30% or something. It's crazy. So basically all that means is say you pull 5,000 out, they take 10% off the top. So they take $500 and then you also have to pay income tax on that money. But in the short term, if you're throwing that money in there, it saves you from paying tax on it. And if you can hold it into retirement, then you're doing real well because then you can draw against it without those withholding tax and then you just pay regular income tax. So the first positions I'm moving in there will be Johnson & Johnson and Starbucks. And then coming into the end of the year, I'm going to continue holding on to these two companies up till December to see what happens because I think through another earnings, these companies could pop up quite a little bit. And what I'm going to do is keep one of these positions sitting here into the new year, and then I'll pay the tax on that money and push it into my TFSA account because at the beginning of every year, you can add $6,000 of contribution, self-contribution that you pay tax on into this account, which then becomes tax-free income on anything you make on that $6,000. So I plan on doing that as well. And then with the rest of the money, well, that's sitting in here would mainly be in Tesla. So just to reiterate, we're getting rid of Johnson & Johnson, Starbucks, and probably British American Tobacco into the RRSP account. We'll probably leave MO sitting here, and then we'll take Tesla and leave it here as well. Tesla is a company that I don't want to put in my RSP, because if it explodes in the next 3, 5, maybe even 5 to 10 years, I want to have access to that capital. And I will just pay the tax on it. And that way I won't get any penalties. And that way I can have full access to, maybe this becomes, a $10,000, $20,000 position, which would be awesome over the next 5 to 10 years. Maybe I can even use some of that money to buy a Tesla car and just write it off as well. But those are the options, and that's what I plan on doing anyways. We also have some dividend income in this account. And finally, what I'll be doing with the BTI money, because I will not be buying back British American Tobacco in my RRSP account. I will, however, be buying some more shares in Johnson & Johnson and Starbucks, along with the VFV, which is a Vanguard Index Fund in Canadian dollars. So it just gets converted through that Vanguard fund, and that way I can start scaling these positions up to about 8,000 each. And the only reason I'm getting rid of those positions in this account, MO and BTI, is because I already have enough in this account. These positions are almost filled. I'm just holding on to them for short-term gain because I think they're just undervalued, and that might be wrong. Who knows? Maybe I'm proved wrong, but either way, I'm happy holding them. They don't scare me too much, and I'll continue to hold them for the short term nonetheless. So moving into the dividends real quick, and then we'll analyze the RBC account. You guys can take some screen caps of this and just take a look at it if you want to study it more. I'm not going to talk about it right now, just because I do talk about the dividends in some of my other videos, and they haven't changed. Still annually, I'm collecting about $5,553 between the 4 accounts combined. And like I said, I want to start evening it out so I get more monthly income that's comfortable monthly income and not staggered the way it is, to help stabilize my future growth. And finalizing, let's just look at 3M in my RBC account. 3M is one you guys voted on in the past for me to buy, and I bought a few shares of it, about 1,000 CAD or $664, or sorry, it's a little under that. It's about 900 Canadian dollars. We have about 1,013 total in this position, or in this portfolio, and we've only got 664 US dollars in this specific position in MMM. We got about 125 US cash sitting in here though, which is nice. A little bit of capital we're sitting on, and we're up on the US. We're about up almost $10 on just the exchange, but we're down $22 on the value of what we paid for it. So that means we're minus $10, but we're still collecting a healthy dividend. And this has been an interesting company to watch, because I'm sure if you've looked at 3M, you've seen the volatility in the stock price go from the low 150s all the way back up to 160 pretty much today alone. Really volatile stuff. So you guys can let me know what you think about all these positions and the dividend income off all of these accounts. But more importantly, I want to listen to your comments, and let's read what you guys have to say about some of my videos in light of all the crazy passive income investors that are out there that have joined this wonderful community. So I want to say thank you, first of all, for helping me out and sticking around for my growth in not only my portfolio, but my channel as well. So let's start with the Jay-Z video at the top here that I broke down his portfolio. And I think that's Maloney Money Mindset says, this is a really cool idea for a video. He has such a diversified portfolio and he's made a killing on Uber. Thanks for sharing, man. Yeah. If you want to watch the Jay-Z video, I break down his entire portfolio. Incredible. I had a lot of fun making that video. I put a lot of work into it. Thought it was pretty comedic. You guys should check it out. Here's one from the Canadian real estate, the best performing video I've had so far on this channel. And this is where I talked about the verge of collapse, why I'm terrified of Canadian real estate. And JG says, I moved from Toronto area into Nova Scotia in 2016. In the last 3 years, I have accomplished so much more than I was able to in the GTA. Over 13 years of struggling and making myself go crazy, trying every angle, I bought houses in various areas of Nova Scotia for $20,000 to $25,000 cash. Which after about $300 of interior paint, I rent them out for $900 monthly each, and the tenants pay their own bills. Wow. First of all, congratulations. I mean, that's absolutely incredible. I did spend $200 on some light fixtures as well. Who cares? It's nothing, man. I'm slowly becoming rich only because I left Ontario, which I now call Onterrible. That's pretty funny. My biggest problem in life now are figuring out where to go for lunch. Honestly, I just bought another house on rent to own for $15,000 over 5 years with zero interest. It'll need about $5,000 to $7,000 more of work to be rentable. They mostly don't advertise these properties. They just do cardboard cutouts. I always keep my eyes out while driving around and exploring. JJG, you're an incredible inspiration. Thanks so much for writing that comment. You really do have to leave Ontario to get wealthy in real estate here in Canada, unless you're absolutely loaded and you can find just the right wedge deal. But I am not. I do not make that kind of income to get involved in Ontario, which is unfortunate because that is where all of my work is as a full-time performer. But moving on. We'll skip some of these because I didn't really understand what you guys were saying about some of these. My college millionaire. Oh my goodness. I salute to you, good sir. It's been a while. I hope your education is going well, as I do believe you are going to school to be a financial advisor. And you say, I would drop MO, Tesla, and GEO immediately for actual good companies, Apple, Microsoft, and index funds. To be honest, it's an easy decision and it's not even close. Remember, dividends come out of the price of the stock, so it's not free money. There are companies that are much better than these stinkers you have. I've always been saying this for a while now, and yes, you have. And my rebuttal to that, even though I'm not arguing you, because honestly, if you just bought, say you divided all your money up between Apple, Microsoft, and an index fund, you'd be crushing it this year, like killing it. But you also have to ask yourself what your personal goals are. My personal goals, and the way I just kind of look at my own personal situation, is I need access to dividend income or another form of cash flow that is reliable and sustainable. And because I am still in the rat race, I do not look at equity growth as often anymore, as much as I look at sustainable month-over-month income, just because I have no stability in my job. There are months and times where I will not be making a lot of money, so I have to find another way of producing that income, but without me being present, as I still want to be able to do my job full time. So I use these dividend stocks that I'm buying, even though they might not have much equity growth in the short term, I do believe in them long term. And the fact is I can tap into that $450 a month on average whenever I so need it. And because I'm young and I've got lots of time to be investing, I want to get it to the point where I can be making $500 to $1,000 a month off dividends that I can redistribute into whatever I want, whether it be more dividend stocks or whether it be companies, index funds, which I have already started focusing on buying index funds, and I will continue to add more index funds to the portfolio. But you got to remember, if I was more in my 30s, 40s, I would probably consider more or less owning safer companies. But for my own short-term personal goals while I'm young, I would like to find some healthy companies to give me some short-term income to help sustain whatever my future may hold. But stay awesome, man. You're awesome. I'm glad you still stick around for the growth of my channel. And I'd love to hear what's going on with you. I should reply to you, and I'll do that after this video. But moving on, what else do we got? Anything else interesting in here, man? A lot of you guys enjoyed that Jay-Z video. Not a lot of you watched it, but I suggest watching it. What else do we got here? Let's scroll through so we can find something interesting. Oh, God. This Trudeau video that I made. Let me talk why I don't like making political videos, because of the hate. Here's one guy, Bart Blay. The end of Trudeau is the best thing possible. To an extent, I do agree, but we get comments like this, like Trudeau is two things, corrupt and dumb. I made a lot of fun of him in this video, but it's not out of hate. It's out of love. Like, let's be real. I'm not a political person. I don't like taking sides on political debates, because to me, it doesn't get us any farther ahead in our evolutionary state, because we seem pretty devolved when it comes to talking about politics. So I just stay clear of it. But I couldn't get over Trudeau's past. I mean, there's so much fun content out of Trump and just whoever's running whatever economy, like Xi Jinping there in China. Like, I wish people could just take the humor a little better. I'm not here to like batter the guy into the ground and say he's the worst prime minister ever, though he might be in your opinion. Who knows, right? But it's just for entertainment. So I hope you enjoyed the video. I explain my own personal opinions in that video. You can check out as well. Passive Income Tom, salute you, sir. Yeah, nobody talks about these stocks, but they're in need of business. Very interesting, Kyle. Yeah, my recent video, I talked about graveyard stocks, cemetery stocks in light of Halloween, which we got to do a Halloween special at some point. But in light of all this, guys, I'm going to finish up with that. You guys are absolutely incredible. I can't wait to get to 1,000 subs. At 1,000 subs, we start live streaming, so consider subscribing and helping the channel out, guys. But stay cool. Stay awesome. I look forward to chatting to you all real soon.